the first one. Bitcoin miners sold record amount of Bitcoin ahead of May's price surge. So with hash price hovering near break-even levels, miners liquidated 115% of their April production. So Bitcoin notched a new all-time high of 109,000 on Wednesday, but that's a small consolidation for Bitcoin miners who last month were forced to cash in a record number of their Bitcoin reserves, according to mining news outlet The Miner Mag. The firm's latest research report reveals that public miners sold 115% of their Bitcoin production in April. So they're selling more Bitcoin than they're making, which is probably not a great sign for their stock prices. Obviously, selling that off and then followed up directly by an increase in the price of Bitcoin, that's a tough pill to swallow, I'm sure. And that does mean that it is also the highest ratio since the tail end of the 2022 bear market. Even today, with Bitcoin breaking to a new record high above $109,000, hash price, what miners earn per unit of computational power, has failed to follow suit. It stands at just $55 per petahash per second, well below the $63 per petahash per second level it briefly reached the last time Bitcoin crossed $100,000 in December. Elevated network difficulty and weak transaction fees have kept revenues under pressure, and this has been the elephant in the room, which is Bitcoin's not getting used. And in fact, the majority of blockchains aren't being utilized. And what does that really mean for miners? Well, for those that aren't aware, and I think most people that watch this channel are, but for those that aren't, miners basically get rewarded for running and mining the transactions, or providing basically the ability to transact on the blockchain in one of two ways. The first way is a block reward, and this is usually on a schedule to be reduced over time. In the case of Bitcoin, it is cut in half every 4 years. And that means obviously every 4 years, miners make less Bitcoin, which usually kicks off an increase in the price of Bitcoin, because obviously power is money. At the end of the day, energy is money, and it costs money to run the miners. And therefore, of course, you end up in a position where they make less. So the value of the asset they are making goes up typically, right? This is changing. And one of the big factors, the second way they get paid, is through transaction fees on the network. So every time you transact on the network, you pay a network fee, and a portion of that goes to the miner. Usually all of it, if it's like a solo block, but we could get into mining pools, all that sort of stuff. I've covered that at length on this channel if you're interested in the more technical details there. But because the Bitcoin blockchain isn't being utilized near as much as it has been in past bull cycles, or in past halving cycles in general, and is at a really low usage rate, it means a lot of the blocks that the miners are mining are empty. And because of that, there's not a lot of fees being gathered. And this means that miners are making even less after this last halving than they have previously. And really, when we talk about cryptocurrency mining, the price of Bitcoin and the effect of the halving on the price of Bitcoin, usually the general consensus is that we will see the halving cycle affect the price of Bitcoin until fees meet parity with the block reward. And seeing that the fees are nowhere near meeting parity, it kind of brings into question is if that will actually come into fruition. Reason being, obviously, is because this has been the most suppressed Bitcoin halving cycle from a price perspective that we've ever seen, right? I mean, typically, we would have already seen a single top that is 3x that of the previous all-time high, meaning we would have expected back earlier this year at the first top over 100,000 to go even higher, closer to 200,000. And then we would expect that to pull back and then happen again here near the 18-month mark coming up in October. But that's not really the case. So The question is, how much of an influence are miners actually having on the price of Bitcoin now that there is just not as much Bitcoin being minted per block via the block reward? And it appears to be less and less. And this is going to be a really interesting time over the next, 4 to 8 years as to whether or not, miners impact the price of Bitcoin near as much as people expect them to. The part of this obviously is due to the fact that, a lot of these companies are trying to stay liquid, generate revenue, and keep cash flow running. And it's forcing them to sell off Bitcoin that they've been holding in anticipation for this bull market. And in the past, that anticipation for that Bitcoin, for that bull market and miners holding their Bitcoin was a lot more influential because miners had more Bitcoin. Now they really don't have as much Bitcoin to influence the market as they have in the past because a lot of Bitcoin is frankly just in circulation and being held by individuals or really at this point companies. And the thing is nobody's selling their Bitcoin. This was brought up previously in a forum post with Satoshi himself, and he kind of predicted that this would happen. In the case that you have large companies or entities purchasing up all the Bitcoin, the appreciation of price will be suppressed because if a company has all the Bitcoin and isn't selling it, and then nobody can access Bitcoin, then nobody's utilizing it, then there becomes less demand for Bitcoin, suppressing the price of Bitcoin and fiat. And so at the end of the day, it does appear that this is somewhat true. The question I have is, what does that look like when the block reward for Bitcoin gets cut in half once again, 4 years from now? And how much of an effect will that have, right? So I think we will be looking at 2028 for the next halving. Will we be seeing an even more suppressed price, or is it really what everybody says, which is macroeconomics purely? It's really up in the air to me. I think right now, at this point in the cycle, from a time perspective, seeing public miners sell off more Bitcoin than they generated for the quarter, or for the month of April, I should say, in this particular case, is a concerning statistic. And so we'll have to really see where it goes from there. And solo mining that doesn't really help. That doesn't help the price of Bitcoin move up or down. I know Best Spartans Forever is saying solo mining is the way right now. I mean, if you had solo mining, if you have statistics for the amount of hash rate to actually generate a guaranteed revenue would make sense. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.